Stock doesn't care what you paid. Stock doesn't even care that you own it. You are nothing to the stock.
Hey guys, welcome back to Investing Mentors. Markets are crazy right now. Everyone must have some pretty big doubts of whether or not you should buy any stocks in the current situation. Yeah, some people might think it's not the right time. Let me tell you something. There is no such thing as right time or wrong time in the stock market. Here's what you should do.
I love it when the things we buy go down.
Seriously. Can you do that? How can you be happy when the market goes down? I'm including myself as well. I know this is really tough, but let's hear it from Warren Buffett and hear what he has to say about people who fear when the markets go down.
I love it when the things we buy go down. I get euphoric. The stocks are down today, and I'm buying more of something I was buying yesterday. I'm buying it cheaper. Now, when you go to the grocery store and you buy something cheaper than you bought it the day before, you think that's terrific. But people with their stocks, they think that the stock knows more than they do. So that when the stock goes down, they say the stock is telling them something, and what's telling me is I can get more for my money. but they take it as kind of a referendum on themselves, and it's me versus the stock. If it ever gets back to what I paid, I'm going to sell it. Stock doesn't care what you paid. You have to remember, the stock doesn't even care that you own it. You are nothing to the stock. That stock is everything to you, And you remember you paid $10.13, and therefore the stock should get to $10.13 before you sell it. The stock has no feelings about you. I hate to disillusion you on this, but it just doesn't care.
And to be honest, I've never seen him funnier than this. Stocks don't care what price we're paying. It's we who should care about what price the stocks are being bought for. If we see the stocks as a business, we don't have to be in a panic mode even if the market crashes. It gives you an opportunity to buy more of such stocks. When markets go cheap, you should rearrange your portfolio. It's the right time to go shopping. So how should you do that? Let's hear it from the man himself.
You can rearrange your business empire, which you own through that little portfolio that you have. You can rearrange that, at a moment's notice with practically no cost. It's a huge advantage, which people turn into a disadvantage. There is nothing about the price action of the stock that tells you whether you should keep owning it. What tells you whether you should keep owning it is what you expect the company to do in the future versus the price at which it's selling now, compared to the other opportunities of businesses that you think you know equally well, and make that same comparison. And that's all there is to owning stocks.
So yeah, if you believe in the business and their plans for the future, that is when you should invest. Such wonderful words, isn't it? So now you should be wondering, buying stocks is fine, buying stocks in a crash is fine. I understand, but how will you determine a reasonable price? If the market crashes, prices keep going down and down. So at what price should we buy, and how would I determine what that right price is? I hear you. I hear you asking this question, but should you really worry? Let's see what Mr. Buffett has to say about the reasonableness of the stock price.
A very high percentage of the time, stocks are in what I call a zone of reasonableness. This is not something, we all know that pi is 3.14159, and little kids can sometimes give it out to hundreds of decimal places. But the stock market's not like that. There's a range of reasonableness, and most of the time throughout my lifetime, it's sold in the range of reasonableness. That range changes over time as earnings accumulate and interest rates change and all that sort of thing. There's only been about 5 times in my life, I think, that I've actually spoken out publicly to say it was outside the range in one direction or another. The most recent one being in October. I was early in October of 2008, and I said stocks were cheap, and I wrote an op-ed in the New York Times. But I'll probably have some chance, once every 5 or 10 years to make a definitive statement. There is a big zone of reasonableness. Anybody thinks they can pinpoint it is crazy. It's not that precise. And fortunately, you don't need to. If you buy good businesses at reasonable prices and hold them, you're going to make a lot of money. And that's true of stocks as a group. It's true of individual companies.
So yeah, you heard right. Reasonableness. It depends. See, this man is 91 years young. He has seen so many ups and downs in his life, as well as in the stock market. He says the cheapest time to buy stocks was the 2008 Lehman Brothers collapse. This interview was dated 2014, so according to what we saw recently, the cheapest time to buy stocks is the 2020 COVID-19 crash. Other than that, there are always some corrections in the market with 20% plus or minus. But if you compare them to these big events, in the long-term view, like 1900 to 2020s, these are minuscule events. So I hope you got my point. Let me show you some of these stocks that made crazy returns after the COVID crash. Most of us would have missed out on these rallies for sure. People who invested during the crash would have made excellent returns because they would have done their research about these businesses already and trusted their instinct on these companies. They would have heavily invested after the crash. So now let's move on to who can we trust? Can you invest in the market because your friend told you to do so? Can you trust me and my suggestions? Or even by Warren Buffett's suggestions? No, you cannot. Never trust anyone. Don't make that mistake. DYOR, do your own research. Here's why I tell you this. Warren Buffett shares his thoughts on why most of the banks and investment firms fail. Let's hear it. Then I will share my thoughts on that, like how you should see that for yourself in person.
Start copying what their dumb competitors are doing. That happens in every business, but it's particularly virulent in the banking business. John Stumpf once said, I don't know why we keep looking for new ways to lose money when the old ones were working so well. But they do, and they copycat. That's a great danger in any business. I warn our managers against it all the time. If anybody comes to me and says, we want to do this because the other guy is doing it, I say, go back to square one and come up with a better reason. But human nature is such that you do want to do what others are doing.
As you can see, although he is talking about banks, it does apply to us as well. Never invest based upon someone else's opinion. We as the individual, we are the last ones to receive the news about some of these stocks that's going to outperform others or go way down. You can take examples from GameStop. You remember that? Stocks rallied from $5 to $325. That's 1,000% returns. There would be people who would still have bought at the top 325 and sitting with negative 85% losses. He or she might have thought it would go all the way up to $1,000. But a wise man wouldn't have invested in GameStop at that point in time because the company wasn't worth it. Their finances were very weak. A simple understanding of the balance sheet would have saved you from a big mistake like that. So this is just an example. Invest in what you understand. If you understand the business, then do the investment. Not by speculated views, not by the recommendation from me, not from any influencers, or even your friends. DYOR. Do your own research. Listen to me, listen to them. Nothing is wrong, but take your time and do your own research so that you can make a much better investment decision for your life. The stock market runs on psychology. If you can understand human emotions, you can make better decisions and make better returns. If you agree, comment, yes, I agree in the comments below. So that's it, guys. Hope you liked my video. If you do, give me a like, share, and subscribe if you found this video useful. We have a curated playlist. I'm linking it in the top. Warren Buffett's Mind. Do watch. It will help you make better investment decisions. Click here and click here to know more about how to be prepared for the next stock market crash. See you next time.